day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds. Margins and
Okie
leverage
dokie,
like
welcome back
mountains
to
climb.
Noobs. It is the 19th of November, and we are down on the day, but down tiny. The markets are pretty flat here today. I think we have some news coming out later in the afternoon, so we might see some volatility later on. And then we have NVIDIA earnings coming out this evening, so that should push the NASDAQ around one way or the other. You currently have an NVIDIA position. So let's try something a little bit different today. Let's have you do more of the talking and tell me about your NVIDIA position. So just like describe it and what it means, like all of the stuff that you have.
We're selling a put for January 26th at the 173 and call for January at the 205.
What does that mean?
What do you mean?
What does that ultimately mean when you sell that put? What are you saying you're going to do when you sell that call? What are you saying you're going to do?
One of them's giving, you're saying you'll buy it at that price.
What price?
Is that what call is? No.
When you sell a call. We want to buy it at 205 if it's 184.
No.
Okay. Do we want to buy it at 173 if it's 184?
Yeah.
Okay. So the put is saying what?
So the put's saying that you're going to buy it at that very. You're saying you'll buy it at that price?
Yes. And the call
It's saying you'll sell it at that price.
do we have 100 shares to sell?
No, we have 30.
Okay. So what does that mean? Like, how is that relationship between those 30 shares and the call going to behave? What is that going to look like? Say the stock rallies. Let's say the stock closes on this January date, the stock is back up to 210. Right? So it's $5 above that call. What is that going to look like as far as your P&L and the value of those contracts?
Selling at 205, it's going to be at 210, you said?
Yeah.
So you're going to make money?
Yes, you are going to make money, but what is the value of that call going to be?
It's a $5 difference.
It'll be $5. So it'll go from right now it's $7 to $5. So you'll have made $200 on the call. But what about the shares? Say they're a regular 184 flat. So if they go from 184 to 210,
You'll make a lot of money off of them.
how much?
To 210, 26. Right? 10,
26. But you're not going to make $2,600 because you don't have
you only have 30.
100 shares. So you only have
So
30.
30%
26.
of the 2600.
30% of 26.
So 13, so like a 9, now 8, something like that. 7.
Yeah. So that'll give you, that's how you can kind of visually look into the future and understand where your risk is. So, if you know you're going to make $800 or $900 on your shares, if this thing gets up to 210, and your call is still going to be making money. So what happens if it gets up to 220? And then what are we looking at? If it gets up to 220, how much is that contract on that call going to be worth?
On the call, at 15.
Yeah, it's going to be worth $15. You only sold it for like $6, right? So if it's worth 15 and you sold it for 6, that means you lost $900. So you'll be losing on that call if it gets to 220. But your shares will have gone up. Go back to the left. If we go from 184, let's see. If you go from 184 to 220, I'm going to cheat. I'm going to use a calculator because brain ain't working. So 34 times
3. So it's
38.
like 11.
Yeah, $10 and some change. So you're going to lose $15 on the call. You're going to have an increase in value of $10 and some change on the shares. But you're also going to have this put that's going to have no value left in it, right? It's going to be worthless. So you're going to make another $8.65 on that put. So even though at 220, you've lost basically, what did we say it was? How much? $900? If we sold it for 7 and it's worth, what do we say it was going to be worth? 15?
What?
The call is going to be worth 15 and
Yeah.
we sold it for around 7. So you're going to be out $800 on that. Shares are going to appreciate around $1,000 at that point, and your put is going to depreciate to nothing. So you're going to have made 800 and some on the put, 1,000 some on the shares, 1,800 minus the 800 that you're going to be losing in the call. So you're still going to be up around $1,000 if this thing rallies all the way to 220.
Okay.
There, that just shows you where your actual risk is in this position. I'm just trying to get you to see where's my risk. Where's the point where I start to lose money? That's the risk.
Okay. So 2 after 210.
No, you're still making money at 210. You're still making money at 220. You're probably even making money at 230. You need to plug in your thing. You're probably even, if it gets all the way to 230, well, you have to take into account that you're already down $900. So basically 220 is around where you're going to be breaking back even if it gets all the way up to 220 to the upside. But you're also going to be making money if this thing stays where it's at or even falls some more.
Okay.
Because if this thing doesn't get to 205, that $700 that is currently the value of the call contract, it'll be worthless if it doesn't get to 205. So that value will decrease and it'll come out. So you'll make $700 back right there just off that call. If it doesn't get down to 173, then you'll make that $865. That right there is $1,500. Currently, you're down $900. So that means that's a $600 profit if it stays between these two strikes, minus whatever the shares do. So if it goes down a little bit more, you're still going to lose more on those shares because you still own the shares. But that's how you should be looking at each one of these positions, mentally looking out into the future and understanding where your risk is for each of these positions. You should have some idea of the relationship between the contracts and the shares, or the contracts and themselves, and the strike prices of, all right, this is where my risk is in this position. This is where my risk is in this position. This is where I start to lose money. As long as it stays in this range, I make money. You should have a mental idea for each of these positions. As you're putting them on, you should know. And then as you make adjustments, you need to mentally update that idea in your head of, all right, well, now my risk has moved and here's where my new risk is. And you should kind of be keeping track of it. So when the market moves, you know your risk and you know where where you need to make further adjustments because you know where the point of like I start to lose money is here, so I need to do something now. You'll see that I actually bought so
Riven.
Riven, I sold a put.
M2K.
Yeah, I bought M2K. So this is kind of
IBIT.
no, the IBIT we bought together. And actually you can close one of those because they're up 30%. So we bought those two before we closed the show on
Just one
Monday,
of
but
them, you
just
say?
yeah, just close one of them. I think we're still going to get more weakness out of Bitcoin. Move it to like 119.
So
See if you can
negative
get filled
one,
at
right?
119.
Yeah, selling.
Yeah. Man, they're you can't fool them. They said no, no thanks.
Still at the mid price.
Yeah, just go ahead and take a little profits off. There you go. They weren't liking that. We're not coming to you. No sirree, Bobby. All right. Um Angel Studios rolled back over, getting wrecked today. That kind of sucks, but it's okay. Hood, your Hood, I added this back on. Remember we sold Hood originally? Well, Hood had a little bit of a bounce yesterday, so I resold another call in here. I went $10 closer to the money, I think. But you just need some more short delta. With this market the way that it is, really super weak market, you needed some more short delta. So I put that on for you yesterday. And then I also
AT
yeah, this one's not working at all. I
is
I got the bright idea that Home Depot is getting a little extended to the downside. So I put on a trade that will make money if we get a little bounce in here. But so far it's just continued to go down. So you're welcome. We need Home Depot over 127 or so. If you look at that. So just right off the bat, you can see your strikes.
320 and 330.
So it's $10 wide. What is this? No, I'm saying what is the name of this strategy?
Strangler?
Hmm?
Wait, is it buying a put? Oh no, it's buying a put and putting a put.
I don't think we've ever I don't know that we've talked a lot about this. I think we've done these before, but we
Isn't
haven't
it
talked a
Strangler
lot
where you
about this.
sell a call or like buy a call and sell a put or something like that?
Strangle is where it's either you buy a call and a put that are out of the money or you sell a call and a put that are out of the money. That's a strangle.
So what is this?
This
Buying
is
puts.
a vertical. So you see how they're both on the same side of the options chain.
It's two
And
puts.
one is a buy and one is a sell. So think of it kind of like a ladder. So it's a vertical spread. So you're basically selling this naked 330, but you're buying protection at 320. So it's a vertical short call or put spread. So you see how you come up with that name? The vertical comes from one is directly higher than the other. Short means we're selling it, which means overall we're doing this for a credit, not a debit. We're collecting money, not paying money. So that's why it's short and not long. Um, so it's a short vertical put is just the type of the side of the option chain that you're on. And then it's spread. Spread means it's defined in risk. And it just a word to describe that you have a finite amount of risk. You're not taking infinite risk. So a short vertical put spread, which is not work. You just over time and through using them over and over and over. It's just like learning a language. The more you use it, the more it'll come to you.
Yeah, it'll be natural. Don't worry about it.
What else we got? I did something else for you. Oh, so go to what do you have only so all right, so like NVIDIA here. You see NVIDIA? Go open NVIDIA back up and then open up Russell and then M2K.
Russell.
Scroll down there you go, so you can see them all. So you see how we have 30 shares in NVIDIA and then we've got this short strangle in NVIDIA. That's what that is, a short strangle.
Yeah. I'm here.
You see
I'm
that?
looking at it. Yeah.
And you see how we just went over the relationship between those shares and that short strangle and how it's going to behave when it goes to the upside?
Yeah.
So this futures product right here, this Russell's futures product, the /RTY. This is a product. Yeah, this is so actually I rolled these out. You'll notice that now you have a lot more time in these contracts. And
January 26 and March 26.
yeah, so I gave you way more time out in the future and I moved your strikes back out. I widened your strikes out and I increased the time. I did that because you needed to free up some buying power, number one, and that freed up not a bunch of buying power, but some buying power. And then I also, when the market was lower than where it is here, I put on a little bit of just a straight long. So think of this /M2K as shares for this Russell product. So both of these are futures contracts. One is the mini and one is the micro. So you see how this says
Micro
mini?
mini Russell.
Yeah, and one says micro. To give you context about the size of this Russell controls the bottom, the lower one, the /RTY. The mini contract controls 500 shares of IWM. So go to IWM, type that in, and look at it.
Wait, alright, you have to re-explain that.
Russell, the size of that Russell product that we're trading is 500 shares of this product.
Okay, so like one share is 500 or 100 shares is 500 shares?
One of those contracts, it's not a share, it's a contract because it's a futures contract. So one of those contracts controls 500 shares of this. So this is $233 right now. So 500 shares of a $233 product is how much?
500 times 200? 50,000. Whoa. 40,000?
I'm not sure where you did go to school, right?
4 zeros?
Try that. Try that again.
500. Oh, I was
500,
400,000?
5 times 2, dude.
Oh, wow.
116 grand notionally of shares. So
I don't know
that's
why I
the
was thinking more
size.
like 4.
I'm not sure either. All right, so go back just to give you a little bit of perspective of the size of this particular product. So this particular trade is using a product that is effectively 100 grand worth of stock. So that's why this one zips around, $1,000 a day, and it's not really a big deal. You get a 1 or 2% move in this product, and you might be down or up $1,000 or more because it's a very large product. So this micro is 1/10 the size of the mini. So it's basically 50 shares. So you can look at this as I bought 10 shares of this RTY, basically, even though they're not shares, it's a contract, and it's a futures product. But it would be the same as if I had a strangle in this RTY stock and I bought 10 shares. That's going to be the same exact relationship between those two products. Does that make sense?
Truthfully, I'm confused.
In NVIDIA, we bought, say, 30 shares, and then we have a short strangle. We have this short strangle here in the Russell, right?
Mm-hmm.
And this is the equivalent of 10 shares because it's 1/10 the size of this Russell. The
So the short strangle in Russell
RTY,
is equivalent to 10 shares of the
no,
Russell.
no.
What?
The short strangle, we just went over the size of that product. That's a $100,000 product, right? The short strangle is just a short strangle. The actual long contract that I bought in the /M2K. You see this /M2K?
Yeah.
That contract is 1/10 the size of the /RTY contract.
Okay.
So it's the same as me going out. You can't buy /RTY shares. You can't buy just 1/10. You can either trade one contract of it or more than one contract. It's not like you can get any smaller with this /RTY product. It is the size that it is, and the minimum that you can buy is one contract. However, this
So then,
/M2K is the same product, but with smaller bytes.
so
It's
that
just a smaller
level of
version.
money can still buy the stock.
Well, you can buy the future contract, yes. And it's going to behave as if we had bought 10 shares of this /RTY because it's 1/10 the size. So if I wanted to create the
So buying
same type
10
of
Could you buy 10 contracts at, and that's equal to 100 shares of RTY?
yes, but you'd be stupid to buy 10 contracts because you can just buy one contract of the RTY. And it's the same thing. So one contract of the RTY is 10 contracts of the M2K and vice versa. But what this allows us to do, so go to the right a little bit and look at your delta. Now remember, look at this /M2K delta. You see how it's 5
Yeah.
and it's not going to change ever. It's always going to be 5. It's going to be static delta, just like the NVIDIA 30 shares are always going to be 30 delta. Whereas these contracts are going to, it's a dynamic delta. So it's going to continuously change. So do you understand where that position is now? So basically, if we ever do get a rebound in this market, these this long micro contract is going to make money and hopefully give you a little bit of additional upside range if we get a rally, which heavens knows we're not looking very rally-ish right now. But I just wanted you to understand what that position is. Going to kind of behave exactly like NVIDIA. All right, so scroll back to the left. Let's see what else we got here. Riven, not working. Wow, that's a decent down day. It's down like 60 cents today. Tesla, that's fine. You're pretty much flat across the board today. Webull has earnings, I think, tomorrow. MU. Oh, look at MU. So MU was a winner yesterday, so I did make an adjustment in here and widened your risk back out. You probably want to roll that call down. This thing is down again today, like another $8, $6. I take it to like the 290 at least.
4.
Yeah, that's fine. I think that gets you pretty flat in there. How much delta do you have?
That didn't go through, did it?
No, you didn't get filled.
Why is the mid going?
Well, just actually take it to the 280. Take it to the 280. Cancel that. Because you had short delta coming into today. You lost. Cancel it. Or you can
Oh, you could cancel replace.
you can cancel replace. That's fine. Hit cancel
I did
replace.
that.
So then you see where your short contract says 290 there. Click on that. You should be able to change your strikes. Oh,
290.
I think you got filled. You got filled.
Oh.
That's fine. Let's see what your delta is in there. Your overall delta is now what? You're still short. That's fine.
-4.
You're still short. I didn't think that was going to get you short, but that did. Okay. And then MP Let's look at MP. I think MP was up on the day, pretty big. Scroll back to the left. Da-da. Yeah. So remember we made this adjustment where we rolled out to February and then rolled down to December? That actually didn't get filled on Monday when we tried to get filled. So I put it back in on Tuesday and you got filled for like a 50-cent better price because we got a little bit of a rally. So this one is working.
14,000%.
It's not good, man. You're a terrible trader. That's not correct. Negative
Wait,
14,000. Apparently, negative 14,000%. That's not right because you sold this for what? 259, and now it's marking at 425. So you're, if anything, you're not even down 100% in there yet. I'm not sure why it's saying 14,000%. That'll be bad if that were the case.
Pretty bad. A lot of money.
Yeah, I wonder why it is doing that. Even, oh, you know what? Sometimes if you enter into, there's weird rules in the stock market. If you enter into a contract and then you get out of the contract and reopen the same contract within a certain time period, must have been what you did within like 30 days or so, it will look at it as a wash sale and it'll put you back in basically your original position. And that must be what it's doing. But you don't need to worry about that. It's more tax related. I don't think what applied. Let's look at applied. Man, this thing is. How many days are left until we get to 21 days in these contracts? 30. So we got about another week or so. Not this week, the end of this week, but the end of next week will be 21 days. And we'll be able to roll some more of these things out. Archer doesn't look like it's moving. AG doesn't look like it's moving. Angel Studios, ugly. It's still falling. Weeble. This one rallied yesterday and sold right back off today. Home Depot. Hey, we're going to bounce at Home Depot. There we go. Hood, I think you just leave that. IBIT, you already closed half of that. MP, you already adjusted that on Monday. So I think you just leave that and let that go. MU, we just adjusted. NVIDIA, we didn't do anything. Oracle is working today. It's up pretty decently today. Oracle, this is one that you could, I don't know if you want to, but you could sell a little bit of premium to the upside in Oracle on an up day like this, just to kind of give you a little bit more credit over time and do it in like the near dated cycle. So like the end of next week, you could come in here and do the 9-day and see if you can get any kind of decent premium for. Scroll up a little bit. So like if I were going to do something in here, I would be doing something like selling like maybe the 255 or the 260
255 put call.
calls. Buying. There you go. Gives you about $30 in range. Yeah. And that'll give you a little bit extra. That gives you a little bit of extra premium that's working on the downside. If we get a down move, then you can just go ahead and cover that. And if we get an up move, you have way more long delta on that short put than you do with that short call. So you're still in a good position in there. Well, not a good position. Good position would be making you money, not losing, but we're going in the right direction. How? I don't think you change anything. Rivian. I think you just leave everything go. Tesla. The only other thing you could do here in Tesla would be to sell a call in Tesla. I don't know that you necessarily want to be selling a call in there right now, but you could. What can you get for selling kind of the same exact thing that we're doing in Oracle. Yeah. Here's the problem with that. You're so far out on that put out of the money that I think this call is going to actually add a lot of capital. Scroll more. Go back. Go higher to collect like, whoa, not that high. Not that high. Go to like the 465 there, or the 460. What does the 460 require in capital to sell that?
Call, right?
I think it's going to go to 89. I think it's going to require a lot of capital. Oh, no, it's not. You could sell that if you want. That'll still lean you really bullish in here. And it'll give you a little bit of, oh, you're not getting filled. You're going to have to take it down. They said no soup for you. Honestly, we should have had those on earlier than right now. We should have had those on to begin with. But c'est la vie. All right. I think that's it. You got any questions? Does anybody in the chat have any questions? Going once. I don't even know how to see the chat questions. There aren't anybody in the chat. No. Okay. Yeah. In the future, if anybody that is going to be popping in here to watch, just go ahead and throw any questions you might have in the chat. And then when we're done with the episode, we'll go back through and answer any questions that are there. But that is it for today. Peace. Thank y'all for watching. Don't forget to like and subscribe and come hang out with us in our Discord. And see you next time. This time.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks, gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. These waiting specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market play, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play band.